Hello, everyone. Welcome to our first December 2022 This Week in Crypto. I'm joined by Maxim here, and we've got a ton to go over after a somewhat surprising rebound week in crypto, as we can see here by all of these green bars. For those of you who are new to our stream, just as a quick recap, what we do here is give as many on-chain and social divergences as we possibly can, showing what is appearing to be bullish versus bearish behind the curtains of the crypto fundamentals right now, and try to navigate exactly how likely in this case, further recovery will look, or how likely a continued long-term dump is in terms of exactly what the metrics are pointing to right now. So, Maxim, first off, how is everything? What have you been seeing in the markets lately?
Hi, Brian. Maybe before we go to this, last week I had to hold the stream alone, and fortunately, that was a kind of good constellation of stuff that I come out with some predictions, which I rarely do. Especially, it's in my position, you try to avoid.
Yeah.
But what we said last week, that we will revisit, or we will see 17.5, or actually I expected almost 18K in Bitcoin or Ethereum. And we say, let's revisit next week. Now we are on this next week, and we actually indeed hit this level. And there was few specific metrics we also covered, or let's say took into account when talking about these predictions, and we could probably visit them again, and we'll see when I'm talking if I keep doing predictions or not, because you don't do predictions every week. Sometimes you wait till setup is formed, but we are still in a very interesting position. And the second part of our last week talk was actually, I asked participants of the stream to have it on their screen, yield, US yield charts on TradingView for 10 years, 1 year and 6 months, because of a very unusual situation, which could probably mean something. I still don't know what exactly it would mean for us, but I hope, and I will remind now again, before we go to the pure crypto things, it is important. What we see in a traditional market is higher yield on the shorter term, 1 year and 6 months, compared to 10-year yields. It's unusual. It shouldn't be like this. But in reality, there is no thing like it shouldn't be like this. It is like this. So it means something. And what it means, we will discover eventually. There are a few interpretations. One of them was also part of growing market price, because one explanation is when you have to pay high yield on short term, 4.5%, I think now it's for 1 year, compared to 3.6, 3.7 for 10 years. It means the market expects Fed still keep higher rate, or maybe increase a little bit on the short term, but market does not believe it is sustainable, and Fed will have to cut eventually. So the logical bet is, okay, market will grow. So if the market will grow, why don't I buy now? As simple as this. But I think the situation is more complex. And if we go back to metrics we've been observing, depends on you, Brian. You want to start from the whole market and just few things you've prepared, then we can eventually, then you go ahead. And at the moment we come to some stablecoins holders, and for derivative platform, or let's say for our compound borrowing and lending, I will show you things. But we can start from general.
Yeah, that's perfect. So yeah, first off, Maxim, thanks for holding down the fort last week while myself and us Americans here were celebrating Thanksgiving. It was It was a nice week to get away with family, but obviously I heard that you made some great predictions here, and 17.5K, I think it got to like 17.6 at one point before it retraced just a little bit. Where Bitcoin stands now, it's at 16.9K. Ethereum jumped over 1,300 and is now back at 1281. So they're up respectively 4% and 9%, but that's not quite the whole story, because we really saw some big altcoin surges, and they were a lot bigger than this, actually, if we looked just 24 to 36 hours ago. Right now, Dogecoin, up 15% in the past week, ApeCoin 23%, Phantom, I'm sorry, Maker, that is, up 37%. There were plenty of big stories that we saw where it was rather unexpected, really. And there are several explanations for it. Obviously, the biggest one is that there was just such a big flush over the FTX, fiasco and implosion, and the 5 million people plus that lost funds from that horrible event. That there was bound to be a bit of a recovery after the dust settled, because an exchange implosion doesn't just mean that all of those coins are gone and the prices retrace the appropriate amount to account for all of those missing coins. They go down because everyone suddenly fears crypto and they don't believe in it anymore. They don't trust it. And so rightfully so, or perhaps in a panic, many of them just sold off and decided they don't, even though they're not part of FTX, they don't want to be a part of crypto anymore. And we saw Bitcoin really retrace down, got to like 15.5, and Ethereum was back in the 1090s or something like that, 1080s. Eventually we got a recovery, but these things do last long, and we'll have an upcoming insight about how long it took for people to really start trusting crypto again after the Mt. Gox incidents back in 2011, 13, and 14, 3 big separate events there. And obviously, crypto was a much different landscape back then, but really that's the closest comparable thing to what we saw with FTX at the beginning of the month, beginning of November, that is. And we always try to look for what history told us for hints at how traders can react this time around. And, the predictable thing was a market flush after that happened. Arguably, I was probably a little more pessimistic than you. If I was on the call last week, Maxim, I would have said rocky ride. But at least over the past week, pretty much right after Thanksgiving, things started to really jump up again. And the question that everyone has is whether this can continue. I actually think it can, now that some dominoes have fallen. It doesn't necessarily mean this is the beginning of a bull run, but in terms of mid-November being kind of a bottom, I can see that being a realistic path, and we'll jump into exactly why here now with some of the charts that we prepared and we were talking about right before this call started. And maybe, Maxim, we can start with this Dogecoin social volume. I bet you guys didn't expect us to start with a little Dogecoin analysis, but there's a good reason, and it's a great top signal from what we've seen, right?
Such signal much value. And the sharing here is not about not much about Doge fundamentals, even though in some sense it is. But for those who maybe don't follow us for a long time enough, actually we started with building a framework for identifying the tops. And we refined and developed it further and further. And I think probably the only ones in the market now have quite a comprehensive framework how we identify the tops. And it consists of quite a few things, but the red line, underlying red line in this framework, will always look for divergence. Divergence between what? There is, according to our knowledge about the market, there is a specific point when everyone is convinced. And it's a good point to be. Of course, ideally, you jump before. And this you will see mostly like explosion of volume, be it social volume, like in this case in the chart, but also combined trading volume and network activity, on-chain volume. And there is a next thing coming. The moment everyone is talking about, even DOGE, yeah? DOGE is really lately one of the most talked, well, except maybe FTX. And there will be time everyone joined, people still talking, but when you look at the data precisely or deeply, you will notice they're talking less than some time ago, and yet the price tries to climb up higher than some time ago. And this is a red light. This is a stoplight. You should, by no means, you should enter the market. And more often than not, you should probably exit it. Yeah. And if you scroll down, and like on a general social volume, it's not so obvious. But now look it down. If you check mentions on Telegram and Reddit related to Dogecoin, you will obviously see what we're talking about. In the middle of growth, huge volume, speculation, talks, and it's just out of the chart. In case of Doge, because this is Doge. When it goes massively. And now the new top was built, but just look at the amount of talks. It's much less. And Reddit and Telegram, people move to another topics. That's it. Attention is somewhere else. And crypto price, it's a kind of formula based on some components. One of components, it's a user's attention. Attention is not there anymore. Of course, if you scroll down more, attention of Twitter users is still there just because DOGE, Twitter, and Elon Musk are very connected. But it's not only Twitter users. You on Reddit and Telegram, you could have seen huge divergences, and you could even, if you're risky enough, you could play the short. This is one of the few setup where we could probably allow or suggest playing short time when you see so strong divergences. And take it with you. Really, I really want to take people with them divergence on social volume, and ideally you also put on top of it social dominance, but it's already even more advanced, where you don't buy at least, or if you have strong enough nerves, you exit position, or if you're stronger, you can even try to short. This is a big example which we came by just today when we were looking to something else. But
yeah, I really like this.
But we see it all the time.
I think it's a great way to look at. It's almost like the anti-Bitcoin social volume / dominance, where we look at Bitcoin's high dominance as almost a bottom signal, because you need a healthy amount of discussion about the number one trading pair, number one market cap asset in crypto in order for it to lead other assets into pumps after Bitcoin gets its own individual attention. But when Bitcoin is not getting its own individual attention, which it really hasn't for about 5 months now, it's gotten an under average amount, and we'll show that in a second. That's when you want to see that at least, that volume might be going to something like Ethereum or, Chainlink or Tether or something that might be a top cap asset that isn't just purely a speculative coin the way Dogecoin is, that doesn't really get a lot of development activity. It's kind of well known to be a meme coin, but that's okay because people can still pump it and dump it based on crowd will, and it's kind of an interesting layer to cryptocurrency. But if Dogecoin is leading the way in terms of discussions, it usually means there's not a lot of organic, institutional investing going on in crypto. It's a lot of small groups and factions that are driving prices up for one individual asset, and it's kind of reflective of many of the mid to smaller cap altcoins, even though Dogecoin itself is a large cap. But I think this is a really cool chart to check in on, and I recommend anyone to check in on Doge, or you could even type in Doge or Dogecoin, and it might give you some pretty good insight as to whether we're seeing a top signal right now in crypto markets or not. And as promised, I can show you the Bitcoin social dominance too. I'll just simplify this and show one day. And what I did here, I'll back it up to the last year. I took social dominance of Bitcoin minus 20. Basically, 20% is our break-even line, where we've seen that anything above 20% social dominance generally is a pump indicator for Bitcoin and crypto. Anything below, it gets a little volatile, especially if it starts getting to these low areas here. And this was happening, I mean, coincidentally around right before the FTX implosion hit. But there's an argument that the price drop would have happened anyways, just by the severe lack of Bitcoin discussion, while Doge and many other smaller assets were getting a lot of the attention, because everyone is looking for that quick pump right now, and the get rich quick opportunities out there to make up for the gigantic 2022 losses that we've had. And, you know, that to each their own, there's nothing wrong with that. But statistically, when we see these low social dominance marks for Bitcoin, you know, prices have a hard time staying afloat. And you can really only see one stretch here where Bitcoin was consistently above that 20% line. And that started right around the bottom in mid-June here, where you actually saw a bit of a recovery. It wasn't the only time there's been a recovery, of course, but this was actually probably the only sustained stretch we've had where Bitcoin was starting to rise again. And then, you know, we started to see a lot of altcoin euphoria again. Everyone talking about, you know, why get a 5% pump from Bitcoin when you can get 20% from, you know, Ethereum Classic or something like that. And then you see low social dominances and prices fall and fall and fall. And that's how we got to 2+ year lows for Bitcoin just recently. So that's sort of related to what Maxim's pointing out here about Dogecoin as a top signal. You also have Bitcoin as a bottom signal for social volume and dominance. But moving on here, why don't we talk a little bit about the Ethereum supply distribution? Maxim, you guys were talking a little bit about this in the call, so maybe you can lead it off.
Yes, actually, that is still one of the signs where we prefer going up more. And you see 4 lines here. Well, of course, green, just for those who see this chart for the first time, we'll mostly use green with field area as a price, in this case Ethereum. And then there are many lines: blue, red, pink, yellow. One of them, can you highlight exactly what you're doing now? 0.1 to 10 coins, so that it's prominent. Exactly. So this is small holders, small holders, and they have specific behavior. They they can really buy it random times, and we don't take the buying pressure for any kind of signal, but they increase of balances. This mostly for us quite a bullish signal, because they leave earlier. Yeah, they leave earlier, according to our knowledge, and they decreased quite substantially. Yeah, and we see this behavior right now. Yeah, the decrease in balances. I think we calculated this morning. It was 84,000 Ethereum that decreased their balance, which means around 100 millions. Quite good. I mean, it's quite substantial. So what this piece of information reveals, those holding not too much, up to 10,000 in Ethereum. So, okay, we've seen enough. We do something with our Ethereum, be it sell or change for something. We want to realize our value in one way or another. Not necessarily sell, but they feel the urge to do something. And an amount of up to 100 millions. And after market moved up, quite good. Yeah. So you would consider they're feeling uncomfortable. And when the small holders feeling uncomfortable on the way up, say, okay, let's keep this growing. There is a chance it will keep growing. Yeah, because from contrarian point of view, the crowd, small holders feel very comfortable at tops. Yeah, they don't want to do anything. Yeah, if they do anything, they increase their position. and now it's a different behavior. So we are still cautiously positive based on this. And some others which lend in the borrowing market, where if it comes there, you will see nothing's happening. But no one make any new debt, no one deposit new collateral, no one is borrowing. It literally looks like the participant, it will be another chart if you share it one day. Or if we don't share, just we might share the link at the end of the stream. The protocols participants are a compound MakerDAO. It reveals their behavior. They don't see opportunity on the market. They see risk much higher to be liquidated than the reward, potential reward, if you take a debt. If even lending rates are extremely low now. USDC, I think it's around 2%. You can borrow USDC for 2% or die. USDT is a bit more expensive. Still, it's very cheap to borrow. No one is doing it, or doing it very little. Combined with the behavior of small holders, which are not increasing, not relaxing in their gains. No, they feel urged to do something. We say, okay, we probably need to grow a bit more. Yeah, we want to see some kind of some level of FOMO, even small one. We don't see yet anything. No signs of FOMO yet to see. So this is a kind of summary. I cannot say how much we can go higher. Yeah? It can be that we go like $100 up, and then we start correcting heavily down. That's possible. Because this FOMO kick-in can happen anytime. Yeah, and unfortunately or fortunately, we have our calls only once per week. So, and might happen this FOMO kicks in tomorrow, and we see on the data, but we don't have this update. Yeah, but just keep in mind for the moment, it's still data says it prefers going up, if even not much. So that will be my summary.
Very interesting. And I think it's important that the largest group here does seem to be rising right now, while the smallest one sees this big drop. That generally would be a good sign for the bulls. And then we're kind of seeing this plateauing for the middle two here. So overall, it looks like this graph isn't pointing to any sort of upcoming retracement, at the very least. And I would favor probably a little more climbing based on what the largest tier is doing of this group of four for Ethereum right now. So very cool there. And then we also have this Tether and USD coin comparison, where we're looking at what specifically the sharks are doing, from $10,000 to $100,000 held in their wallets. What can you tell us about this one, Maxim?
Yeah, that's another piece we like to observe. What it reveals is do they prefer to accumulate stables, so to say crypto cash, or they want to move out of crypto cash to some investments? At the moment, it's a kind of stable, but there is no sign to buy the dip, or there is no yet. Once again, it can change any time. There is no sign that they say, okay, we feel FOMO. Yeah, we feel urge to buy something. They just keep accumulating it. And we see this behavior since when? July? Yeah, kind of July. Yeah.
Late June.
And we experienced that drop, quite substantial drop. It means they kind of confirmed in their investment strategy. They confirmed, okay, it's a good idea to accumulate stable because look, we already crashed one time. Even we tried to buy the dip, there is one decline, didn't work out, so we probably should keep accumulating crypto cash. The strategy out of it would be, in case, just imagine Bitcoin grows 2,000, Ethereum 200, and we still see either stable or even increased stablecoin holders, it's a strong buy signal. It means they still don't feel any urge, and they say, okay, it's temporary, it will go down. This is the easiest and the more probably one of the strongest signals you will get it. But if at the current level we go a little bit lower and you see sudden drop in stablecoins holdings, it means we'd better be prepared for reversal and even deeper retrace. Because what it would mean, what would it reveal, that these participants saw it, okay, it's an opportunity to buy the dip, so to say. We expect to go higher, and when majority expect to go higher, it doesn't happen. So always play this contrarian game with understanding how the metrics reveal the behavior of specific groups, and bet aggregate like we do it now, so they represent the whole group. And wait for some picture. It will become clear or visible sooner or later. We don't need to push it.
Yeah, cool stuff. Really cool stuff. And I'm curious, Maxim, what do you think about the difference in tiers here? Because I like to also look at the 100,000 to 10 million. So kind of the full-on whales for USDT, USDC, BUSD, and DAI. And they've also shown signs of serious accumulation. You can see how much BUSD went up right when the FTX collapse happened on the whale side. And right now it looks like they're starting to show a little bit of a sign of a retrace here. So this is in contrast to the 10,000 to 100,000 that you were showing. And I'm just curious, do you see any differences between like the sharks and the whales and what that would mean?
Normally would mean that whales, they're the ones who are moving the market. So if they decrease stablecoins, most likely actually it means that what we've seen as an increase in prices, it's because of these whales. They decide, okay, why don't we try to play a little bit long, as the market seems to be depressed so much. Yeah, they're the ones most of the time who are buying the first. Just need to keep in mind BUSD here, strong increases because they merge, I think, many stable coins on their platform into one. Still, it's already over the process. We can see what's happened in the last few weeks. And you're right. From what I see, the stablecoins position decreasing. Could be. If it keeps decreasing, it's good. Yeah.
It's at least just starting to.
I wish this to keep decreasing. Yeah.
It might be too early to tell.
Yeah. It's not a short-term indicator by all means. Yeah, it's if you make a decision, so you should consider or see the market in 4 to 6 weeks time frame and make accordingly position building, because otherwise it will be just too much noise. But if you consider 4 or like 1 month of data, then you can see something.
Gotcha. Yeah, I think it's very interesting to watch how these 4 stablecoin lines are moving with each other, and of course what the Bitcoin whale line is looking like here in bright green. This is the 100 to 10,000 coin holdings over the past year, and obviously ever since late October 2021, we've seen kind of a continued dump going on, and it finally showed a little bit of a glimpse of hope here just about 10, 11 days ago. And it's hovering just above that bottom right now. And we're going to have to see if Bitcoin whales stay above, this 44.06% held line right now. If it does, that might be at least an indicator that they've stopped dumping and are eventually going to be accumulating. But, we'd have to see more than this. I mean, even though we've jumped up, a modest 0.21% accumulated by them over the past 10 days. It's not saying much when they've dropped almost, I think, 4% of the overall supply over the past year, which is just a ton. So all 5 of these lines kind of lend to each other. And if they're all moving up more than going down, it's generally a sign that there's a bullish divergence forming at the very least, and prices are more likely to go up. So whale behavior is always a fascinating subject to keep a close eye on. And of course, on the subject of whales, while we're here, we also have Ethereum whales, which have actually been showing quite a bit of positive movement for the first time, at least since August. So we're looking, Ethereum's a little tricky. If you look at just, the the millionaire addresses, it doesn't have too much price correlation. And if you look at just the shark addresses, kind of same thing. But if you combine them and you look at anywhere between 100 to a million coins held, which is a very wide range. I mean, you're talking about almost 2/3 of the overall supply held. But this is the key area that you want to look at. Anything over a million, it's almost certainly going to be exchange addresses. And even 100K to a million, it's like half and half exchange addresses versus human owned, and actually reacting to price conditions and market news. So combining them all together is really what I've seen to be the best correlation here, because you can see times where, Ethereum is starting to get dumped by these sharks and whales, and prices versus Bitcoin are going down. Remember these green bars, it's not just Ethereum's price, it's Ethereum's price specifically versus Bitcoin. So obviously all coins are going to follow Bitcoin to an extent, but if you really want to find out when it's a better time to be in Ethereum versus Bitcoin, you want to look at, how the whale behaviors are correlating with the price versus Bitcoin specifically, not just price in USD. And you can see pretty clearly, like the long-term dump going on in blue is correlating with the declining green bars up until right here. And look at that. They started accumulating right when the price bottom hit on July 11th, July 12th. And then it started to rise in tandem right up until here. They took profit on September 5th. This was a perfect leading indicator because you had a couple days where there was a local top going, and then boom, there's this huge plummet, and you see prices follow down, and they really just continued down. This would have been considered kind of a bullish divergence right here. If I hold down shift, just this area where you see the whales dumping and Bitcoin's or Ethereum's price versus Bitcoin actually rising, that shouldn't last because of the fact that whales are dumping right here, sharks and whales. And pretty much since November 7th, right when the FTX implosion happened, they've been accumulating pretty heavily, and they've actually added just about 1% of Ethereum supply, which is very significant. That's an extra 1.5% added to their existing bags that they already had. Yeah, exactly.
1 million Ethereum.
I think
makes, yeah.
Right. I think it's like 1.1 million
to be exact.
To be exact. So you're about spot on. So this to me is a very good sign, considering they've actually been accumulating heavily these past 3.5 weeks or so. And if we start to see, 67, 68% held again, that would be a sign that Ethereum is likely a better bet than Bitcoin for at least a short-term period while we're seeing this kind of accumulation going on.
Good point, yeah.
And then one other thing while we're on this specific chart, we want to keep a close eye on funding rate as well, because we saw significant shorts go down the days following the FTX implosion. And of course, when that happens, prices recover. And then when the shorts started to dissipate, prices went back down. And then we saw kind of a little bit of a flat period. We see DYDX a little bit short throughout this last 3 weeks. Deribit pretty close to even. BitMEX is hovering pretty much even as well. And Binance even maybe a slight long bias recently. But if you start seeing all four of them in short territory like this, boom, that's going to be a huge bottom signal, because typically prices always move toward the direction of how can we liquidate all of these perpetual contract funding rate longs and shorts at any time. If people are excessively long, prices tend to go down in order to liquidate the longs. If everyone is going short, prices tend to move up to liquidate those shorts, and rinse and repeat. That's always been how the markets work. Just to zoom out to like 6 months here to give better perspective. Yeah, so like right here, you can see the big longs going on, and then boom, there's this short drop. A bunch of shorts right here, markets actually rise. Looks like Deribit really had the extremes here, and you can see how markets kind of go the opposite direction of them. But overall, just combining them all together, you can clearly see when the big tops and big bottoms are starting to form. So keep an eye on funding rate right now for Bitcoin. And then, of course, other assets as well. We've got this funding rate model where you can check in and see that 1 inch, for example, is seeing an excessive amount of shorts right now. Anchor, excessive amount of shorts. Solana, interestingly,
and
which
keep in
people
mind,
have been very,
Brad,
very bearish
you maybe
on.
didn't get because it was during your nighttime. Anchor was hacked overnight. Yeah.
Oh, good to know. So this is a reaction to the recent Anchor hack.
Yeah, just happened when you were asleep.
Yeah. So, I mean, in general, with the exceptions being certain hacks and real events in the news that might impact the long-term viability of an asset, without those extreme cases going on, like a hack, generally, if you're looking at an asset that's getting heavily shorted, and this is not investment advice, Solana is a very volatile coin that there's legitimate arguments for a long-term bearish case. But at least right now, when you see something this low, there's a huge negative bias towards Solana. Historically, that really increases the chance of a short-term rise until people stop shorting it so excessively, because there's a huge unanimous feeling that Solana will just continue downward right now. And when there's unanimous opinions, they're made to be broken, and people get punished when they're kind of going with the crowd too much. And the crowd is excessively short on Solana right now. So just something to keep in mind. It could change, by the next hour. So this is really like a very swing tradey type of metric if you're into that sort of thing. All right. Before we get into the Bitcoin metrics, I want to just do a quick summary of the November recap report that we just dropped yesterday. If you're a Santiment Pro member, you can access this right away. Just go to insights.santiment.net and you'll see this as our most recent insight. If you don't have Pro, you'll see just the first few paragraphs of this, and then it'll cut off, but that's okay. All you have to do is go to our pricing page and sign up with a free 1-week trial, and you can instantly get access to all of this, explore all of the metrics that we're looking at in real time for the next week, and see if it's right for you. We have the most comprehensive metrics anywhere in crypto right now, and we really believe that this platform can provide what you need to improve your trading. So keep that in mind, and if you sign up, of course, you can see this whole article that I'm just going to zoom through really quick. You can see here what we're looking at is the difference between Bitcoin and Ethereum right now, down here in green. And then we've got the S&P and gold's price up here in teal and gold respectively. And look at how ever since mid-October, when the S&P bottomed out, they've just been on quite a rocket ship upwards here, while gold is kind of doing similarly. They kind of bottomed out right at the beginning of November, 30 days ago. And meanwhile, this FTX event, which is very obviously right here, this was the key point of separation where we no longer have this big correlation between crypto and equities and gold. Instead, they're kind of acting on their own at the moment. Arguably, they're still kind of moving a little bit in tandem, but you can see with all of this separation, there could be some room for crypto to play catch up right now after arguably an overreaction and sell-off that wasn't necessary after the FTX fiasco went down. So if there is still a correlation between crypto and equities, theoretically, that would mean that crypto should be making up ground week in and week out right now in order to catch up to what is around a 12-week high now for the S&P 500. And this shouldn't be permanent if that's the case. Now, if the correlation did separate, that's okay as well, because crypto generally pumps best when there is no correlation. There's not an anti-correlation. There's not a pure correlation between them. There's just none, and they move kind of completely on their own. So that would be better for the long term, because bull runs typically start under those kind of conditions. I would think just over the past few days, that there still does seem to be a bit of a correlation going on with the way that they both kind of pumped together, and now they're retracing together today after the S&P is looking like it's coming back to earth a tiny bit today. But it's really early to tell. And if they are still very correlated here, I would expect Bitcoin and Ethereum to slowly get back up to speed with where the S&P is. Do you have any thoughts about the correlation here yourself, Maxim?
Sorry, Brian.
No,
Did you ask about correlation?
Yeah, I'm just curious. Do you see hints that the correlation has officially broken, or are we kind of seeing signs that they're connecting again?
I think it is connected again. It was the broken part was only during FTX debacle, and shortly thereafter.
Right.
After this, it's maybe last week or 5 days. It's correct again.
Right. So I was saying, with them being correlated once again, at least for the short term, that could imply that Bitcoin and Ethereum have some ground they can make up against the S&P, because this was kind of that oversold period where everyone was panicking about crypto exchanges.
Yeah,
and now
I know what
we're
you mean.
kind of bouncing a
I
bit.
understand where you're coming from, but
Yeah.
I'm afraid in the financial market, not necessarily work like this. It was a kind of fundamental and objective reason for crypto to be developed compared to stock market. It happened. It doesn't mean we will recover or will catch up fast. It might take a long time, and most of the time it will happen when no one expects it. But generally speaking, yes, I do agree that crypto market, once it gets fire, it moves much faster. Yeah, what we saw on the way down, it moves so fast. You could barely measure anything. How many percent will be down next day? The same on the way up. And it's both way very easily.
Well, there you go, folks. It's either going to catch up slow or it's going to catch up fast. So either Maxim or Brian will be right on this one. But either way, I mean, we both kind of agree, Maxim. There is still what appears to be a correlation between the two, and they've kind of clicked together again for now. You know, when we were talking about this 2-3 weeks ago, it was looking like they were really just fluctuating in their own ways without any dependency on one another. But with them being still connected and crypto kind of being traded as a high leverage tech stock, you know, you'll have to watch and see what the Fed is doing right now. And we just saw an announcement recently by Jerome Powell that they're at least planning to slow down the interest rate hikes that they've been executing throughout 2022. And as long as those interest rate hikes are beginning to ease, that would be a good thing for equities and therefore crypto. So I would watch that news closely. The next meeting is in about 12 days, the 13th and 14th, I believe, of December. So it's coming up fast. And if indeed, you know, they have something only like a 25 BPS interest rate hike this time, that would be a very good sign that the S&P and therefore crypto are on the path to recovery, because that's one of the big theories as to why we saw the big dump that we have all year long, was just those heavy interest rate hikes to make up for the basically zero interest that the US had on their companies for about 2 years after COVID hit. So interesting stuff there. Anything else that this one as well. This is just how we saw the fluctuations between FTX versus Trust Wallet going down. Trust Wallet is basically a reflection of the crowd's interest in self-custody throughout November. And you can see that, you know, the FTX news was all over the place beginning on, you know, the 7th, going up to, well, really all the way up until, I would say, 2 weeks ago, when it was really getting a lot of discussion, and now it's at least starting to calm down. Meanwhile, you saw that self-custody was really the topic of conversation. CZ himself put out a big post vouching for Trust Wallet and Trust Wallet token, and that really helped Trust Wallet token surge around 115% in just like less than a week. And it predictably, the amount of discussion and interest has gone down. And I would actually call that a good thing. You know, when it comes to self-custody, it's something that I recommend, Maxim would recommend, you know, do not leave all of your coins on exchanges, only leave on exchanges what you are open to losing, because the reality is this FTX situation is not an isolated incident. It's happened to many different exchanges over the years, and not just Mt. Gox either. Smaller exchanges, it happens, I don't know, at least a couple times a year, depending on how small of an exchange we're talking about. And with that said, you always have to trade at your own risk. And if you are leaving your coins on exchanges, you know, the phrase "not your keys, not your coins" does have some truth to it. I mean, it is true. They do hold your keys, and if something happens to the exchange, your coins go away with it. So all of this discussion about self-custody and putting your coins into Trust Wallet specifically, that's good, because traders naturally are going to react to a disastrous event with cautiousness, and perhaps want to overcorrect a bit with how uncomfortable they now are leaving their coins on exchanges. But at the same time, if all of the coins are off exchanges, that means that circulation and daily active addresses are really going to dry up fast, because no one's going to be trading. And the amount of circulation that can happen away from exchanges is pretty fractional compared to what it was before, you know, the FTX implosion happened and all of this trust went away. So really, it's both a good and a bad thing that people are moving coins away from exchanges at the rate that they are right now. It's good that people are being more safe and they're being protective over their assets that they, of course, deserve to keep. Nobody should be hacked in crypto. That if hacks went away in crypto, we would see things go mainstream very quickly. But because hacks are so relevant and exchanges are not reliable yet, people have to be safe. However, it's bad because prices tend to move up based on utility and usage. And when coins are not being used and traded as they're designed to be, prices have a tough time recovering and generally go down because things get stagnant. So that's something to keep in mind here. And I thought this graph was an important reflection of that. We already went over this, but this just highlights, you know, the significance over the last 2 years of social dominance of Bitcoin, and how high social dominance leads to price rises, low social dominance leads to price drops. And it's actually pretty stunning how clear these various sections are. Things go low, look at that drop. We finally see a recovery, price bottom hits. Goes back down as everyone gets euphoric about altcoins, prices start going down again. So I really like this chart a lot, and it's something you should definitely add, if you can, to your own bookmarks. And then, as I mentioned, this just reflects how much the supply of Bitcoin has gone down over just the past, 3 months here. And we're actually at a 4-year low now, folks. It hasn't been this low, 6.48% of Bitcoin on exchanges since November 2018. So that's pretty significant, to say the least. We already talked about Bitcoin and Ethereum whales. And then take a look at the NVT model right here, which is showing that we're on our 4th straight month of a bearish circulation divergence. We're simply just not seeing enough unique tokens being moved right now. People are very afraid of further downside, and they're rather stagnant. We're not seeing a lot of dormant token movement at all. The older addresses are kind of just sitting on their coins and not touching them. And we need to see some of those coins start to move if we're going to start seeing this kind of rebound that we saw, you know, starting in September 2020, where we had, you know, this stretch of short bearish divergence. All of a sudden it started to look more neutral. And then you can see 1, 2, 3, 4, 5 straight months of semi-bullish divergence where the price absolutely took off, until red bars showed, where you can see the prices started to get volatile. They went up and down. And then we see this new all-time high in October and another one in November. And it actually stayed bullish for quite a while, which is interesting, even though prices were going down. And I think this was more a case of, the inflation hike rises beginning to take effect, which kind of neutralized the fact that we were still seeing enough good circulation here. And now we're back in bearish territory, which is not ideal. We want to see, December start to show maybe a yellow or even light green signal, which is what we want to see for the big breakout going into 2023. MVRV as well. So average trading returns, as you would expect from the bloody beginning of the month that we had. Yeah, there's a lot of underbought signals going on right now. There's a few exceptions: Chainlink, Phantom, OKB. These assets all had great stretches in November compared to their peers, and that's why they're looking like they're a little overbought. But for the most part, you can see these semi-underbought signals for a ton of them. I wouldn't pay much attention to this one because this is FTX token, which, as we mentioned, it goes beyond the fundamentals there. There's a reason why nobody wants to touch it right now with the exchange going bankrupt. But there are plenty of other opportunities here. You can see AMP, Celsius, Chiliz, Compound, Curve, Decentraland, Engine Coin. And I would nix Celsius off that list too, because they went through their own bankruptcy earlier in the year. Maker, Scale, OMG Network, The Graph, Sandbox, just to name a few. But overall,
many of them quite good names. Okay.
Yeah. These are basically the top ERC20s. They're the top assets that we have MVRV data on. So that's what this model shows. And if you're a Sandbase Pro member, feel free to download a copy, message us on Discord. If you don't have the links, we'll be happy to give them to you. And we'll give you directions to make sure it's up and running, so you can always check on this in real time. And yeah, there's quite a bit to uncover here in the November recap report. So I urge you to get yourself a free 1-week trial if you're not currently a pro member, and it'll be well worth your time, I promise. All right, a few Bitcoin quick updates, and then maybe we can take some questions here for the last 20 minutes or so. So we can see volume and transaction volume, they've kind of come back to earth after the huge polarizing spikes that happened at the time of FTX's collapse. Trading volume's pretty much back where it started in September. This is just a 3-month view. You can see that on-chain transaction volume is particularly low right now. This is the lowest it's been. I could even go back a little. Yeah, I mean, we're close. We're in that 1-year low territory right now for the amount of transaction volume going on. So that's a bit of a concern, and it makes sense with supply and exchanges just going lower and lower, and people locking up their assets without trading them right now. I think this kind of fear can probably go on for multiple months before people start getting comfortable trading them on open markets again and centralized exchanges. Daily active addresses, we did see a big spike here in Bitcoins. This was the largest spike in about 5 months, going back to mid-June. And that was a good sign for sure. I like to see that this line here, it's kind of hard to see, but this is just a 30-day trend line. We're sitting at about 953,000 daily active addresses per day right now, which is a lot better than it was a month ago, sitting at 892K. So we're starting to get close to the 1-year high, which occurred right around here in May. And if that continues, I would actually be optimistic about Bitcoin being able to turn around, even with circulation kind of dropping off and being in that bearish divergence level that it's at right now. MVRV still looking okay, as we already saw in the model. Bitcoin is not particularly oversold or overbought right now, probably a little bit biased toward oversold still. The short term, the MVRV for 30-day traders is right at about even, sitting at -1%. But look at the long-term holders. The 365-day average trading return right now is still at negative 35%. And no matter what interval you're looking at, MVRV is going to hover around 0%. And as long as it's well below it, like we see here, there is a greater chance of a rise than a drop right now on the long-term scale. Doesn't mean by next week, doesn't even mean by next month, but if you're on the long-term time scale, there is much less risk being in Bitcoin compared to the historical average time. You also see that I've added the MVRV Z-score ratio chart. And if we look way back, let's go like 10 years. There are only really a few moments where we see the MVRV Z-score in a negative spot here. We can see it, you know, it dipped very slightly on Black Thursday, but I wouldn't really count that because that had to do with a event-related instance. But we did see a longer term one here that was in similar territory to where we are now, back in late 2018 all the way up to March 2019, and that marked a local bottom. If we go back further, January 2015, all the way up until October 2015, that 9-month stretch. If we start right here, I know it's kind of hard to see because the price axis is so skewed, but if I just hold down Shift and I go from the very bottom right up until it crosses back into positive territory, price went up, depending on which pixel I stop at, anywhere between 50% to 71% just during that 9-month stretch where MVRV's Z-score was actually negative. So note that this is quite a rare instance right now where the MVRV is in a severely negative territory when factoring in multiple timeframes. And when that's the case, historically, prices have been on the side of the bulls. So this is arguably a more long-term bottom signal than we've seen in a very long time. We already touched on funding rate. Actually, I want to see this really quick. I think it's because we're looking at such a long term. That's why. Oh yeah, okay. That's just the FTX reaction right here, where everyone was shorting everything they could find. Whale transactions aren't looking like anything special right now. We'd love to see those pick up. In fact, they're peculiarly low since the FTX fiasco, especially $1 million plus traders. Like they're not touching Bitcoin in large quantities at all right now. We already touched on supply distribution. I'll look at this in just a sec. We talked about dormant tokens not really moving. The last time we saw the mean dollar age this low, or this high, I should say. Wow, we have to go way back. This might be the largest it's been ever, if I'm not mistaken. Yeah, so that's very interesting. The average days in which an investment has sit in its Bitcoin address is 483 days, which is the highest it's ever been, at least going back a decade or so, up until we had data. So that's significant. It means that there's quite a bit of dormancy moving or happening right now with the lack of coins moving. And we're hoping to see, if we zoom in, we're hoping to see a little bit of a plateau like this and maybe just a slight downtick. But so far, it's just been a continued move up.
Just to say
stagnant.
so that other people knows how we use this indicator. It's mostly it shows redistribution from those who accumulated to the next holders, and it has to decline, and it has to decline on a growing price. So the moment you see that, and it doesn't come in the beginning, so you cannot predict the bottom, but you can confirm the trend, and you can do two things: prepare for eventual sell, or even double down or buy, because it shows the strong trend of redistribution. And in Bitcoin, it's everything about redistribution. Always those who accumulated in the previous cycle, they will sell it to the next one. You don't need to check this chart every day, but we do like to check it every week, every second week, just to make sure we didn't miss the point where, oh, we're in a bull market. So the moment you see this indicator going down on a growing price, we're in a confirmed bull market. We are not yet, for obvious reasons. It's just we barely bottom up a little bit, but it's has been proven 3 times in the past. It's very strong indicator you want to pay attention to.
Yeah, thanks, Max. I think to give an indication of just how much redistribution is happening at any given time. So look for this, in short, look for this line to plateau or start moving down as a key indication that the next bull run may be starting. Network realized profit loss, as expected, lots and lots of negative spikes since the FTX implosion, and they're still really going on now. So that's a sign of capitulation that works in the bull's favor too. It's a long-term plus if you're waiting for prices to move up. Supply and exchanges, we talked about just the massive amount of coins being moved off of exchanges right now. And you can see on the 28th, this was actually, I think, the second or third largest outflow over the last 10 years. And that's no exaggeration. The only other time was like 2018. There was a similar outflow of this size, but clearly it's just a continued reflection of how much people do not want to leave their coins on exchanges right now. And weighted sentiment also looking negative at the moment after a little bit of added discussion here from mid-October up until the FTX stuff. But back here in negative, this is the most negative it's been since late September. So keep that in mind. Negative is usually good for prices, and positive means there's a little too much euphoria going on. So that's good as well. And then development activity, not much to say there. It's looking fine. Cardano, Polkadot, and Kusama are the top 3 developing assets right now when it comes to notable GitHub submissions. Okay, so we're about 5 minutes after right now. Why don't we very quickly take a look at a few questions, assuming there are a few.
Gary, did we see any questions?
We can look at Cardano. I saw a mention of Litecoin as well. Litecoin pumps usually lead to market dumps as well. That's interesting, Danny. I've seen that Litecoin, at least historically, can actually lead Bitcoin on occasion. So if Litecoin pumps, using the same Lightning network as Bitcoin, there often is a correlation there to what happens to Bitcoin next. But then if Litecoin dumps, that's not good as well. So if it's a pump and dump for Litecoin, not so great. If it's just a pump and then goes flat, that can generally be a good thing for Bitcoin in my experience. But I think that's a very debatable topic. Okay, so we'll start with Cardano, as Gary suggested, and maybe have time for Litecoin as well. What is going on in the world of ADA? We just posted yesterday about the development activity of Cardano, and I mentioned how it's head and shoulders above all other crypto assets right now on the 30-day moving average for development activity. So we factor in only GitHub submissions that are actually theoretically innovative for the coin and are showing signs that the asset is getting developed properly. And generally, as our former colleague Valentin wrote in an article about 4 years ago, he mentioned that high development activity is a good sign because at the very least, it implies that the coders believe the project will be successful and it's shipping more features, and there's less probability that the project is just an exit scam. Because why would all these developers be working so hard to work on the asset behind the curtains where most people aren't even really paying attention to it, if they're planning to just rug pull everybody, right? That's why you see other assets, I won't name them, but there are plenty of other assets that barely ever get development activity. And there's a high correlation with those coins that get almost no development activity and eventually being a rug pull. You rarely see one, like Cardano or Polkadot or these high, Ethereum high developing assets that turn out to be a scam, right? It's so rare to see because they're actively working to improve them. So that's something to keep in mind here. So yeah, I mean, going back to the on-chain and social charts, we do see there's been a big uptick. This is a lot different from Bitcoin, you may notice, where the on-chain transaction volume is actually quite high right now. We really haven't seen these red bars be this high. This is the amount of Cardano in Cardano currency, not dollars. We haven't seen it this high in a very long time. We saw a little bit of a glimpse here in mid-July, but we'd have to go back, I think, toward the beginning of the year. Yeah, we see a few big spikes there, but this is a very good sign. We're starting to see some Cardano transaction volume really pick up right now. Trading volume, mind you, is still very low here in white, but the transaction volume, I like to see that there's been a pretty big uptick in the amount of on-chain activity there. Similarly, Cardano's circulation did have a pretty brief spike. This is what most assets were doing, so this was not independent to just Cardano, and it's kind of normalized for now. Daily active addresses also had a big uptick about 10 to 17 days ago. And that's good to see as well. It's not quite sinking the way it has been throughout the middle part of the year. So that's good to see. MVRV ratio. So we'll look at the 30-day as well. This is the past year. Right now, the 30-day average for traders is sitting at negative 8.5%. So it is a better time than average if you are adding on or holding Cardano, because of the fact that the average traders are actually down here on the short-term time scale. And then the Z-score, if I get rid of the red line, and we go back, let's say 2017. Yeah, so that was right when Cardano started. The Z-score has really been negative since late March, and that's a good thing as well. As we saw with Bitcoin, it doesn't happen too often. It's happened a lot more with Cardano, and people have very polarizing opinions about Cardano. So they might say this is justified to be down here, but according to average trading returns, yeah, this is more than a point below standard deviation for what average is for Cardano. And it tends to see some pretty wild swings because it went up to almost 7 points above standard deviation back here in February 2021. And it was up almost 5 points above standard deviation in August 2021. But pretty much for the majority of this year, it's been well below. And this is getting close to the lowest it's ever been, which was in November 2018. And when that happened, that was right around the bottom. And you can see that price, well, pretty much if we go all the way until it goes positive, yeah, Cardano went up about anywhere between 2x to 3x those next 7 months or so. So keep that in mind. If it repeats history, this is a good time to be in Cardano because of how low the average trading returns are looking at the moment. Funding rates fairly even right now, not much to say there. Whale transactions still extremely low. Let me zoom in a little to the last year again. Yeah, just like most assets, we had a bit of an uptick here around the FTX news break. And then let's take a look at supply distribution to see what kind of addresses are starting to see an uptick. So you can see right off the bat, this one, and this one are actually seeing pretty heavy increases since the FTX news broke. And that's interesting to see. I mean, this is a lot more new addresses, and it could be related to large ones breaking, but we're not really seeing much evidence. I mean, The million to 10 million line had been going down since August already. The pink one kind of staying pretty flat throughout the year. But yeah, we're seeing a lot more of these shark and whale sized addresses on the network over the last 3 to 4 weeks. Maxim, if you're watching this, I'm curious, do you have any opinion on why this may be occurring right around the time FTX imploded?
Is it just holders from Cardano or?
Yeah, so this is just the amount of addresses, anywhere from 100 to 1,000 to 100,000 to 1,000,000. So it's like the shark and whale. I wouldn't even call this shark. So like from here, 1,000 to 10,000. These are sharks, and this is definitely whale addresses.
Could it be that they're expecting airdrop for the new coming coin from Charles Hoskinson?
Yeah, I heard a tiny bit about that. It's very possible that's related.
So typically how airdrop is done is that you have a specific amount of coin per address, and maybe they just split into many new addresses. I don't know. It's possible.
It's hard to speculate. It's we can't ignore the fact that it started pretty much the day, November 8th, that all the FTX stuff went down. Yes. Not all coins look like this. So
you know what?
Then
it could be that maybe it is the same flight for custody, self-custody, just creating a lot of new addresses and withdrawing from exchanges.
Yeah,
could be part of the same game.
And I wouldn't rule out your airdrop theory too. I mean, whenever we hear about a big airdrop, this kind of behavior is typical, and we start seeing a whole lot more addresses pop up on any relevant assets that can benefit from that airdrop. So it's certainly a possibility, but it's nice to see that these shark and whale addresses are starting to really increase without them just coming from the massive exchanges right now. Because if it was just like the orange and purple line dropping while these smaller ones rising, then it makes sense. It's just a bunch of huge addresses digressing into smaller ones, but that doesn't appear to be the case here. They're organically rising. Anyways, so it looks about the same here. Those same addresses are really pumping right now in terms of the supply that they hold. So that's great to see. Even like this 100,000 to 1 million one, ever since the FTX stuff, they're gaining in supply. They've added, about 0.36% of the supply, 2.13% more added to their bags. Huge rise here for the 10,000 to 100,000. Their bags have increased by 5.3% just in the past 3 weeks. That's huge. Anyways, ratio of daily on-chain transaction volume looks fairly normal for now. Not too many top or bottom signals. Continuing to see some pretty dormant, stagnant movement on the network. Not a lot of older addresses interacting. Network realized profit loss, no major spikes. Very little discussion related to Cardano as well. It's staying low here at about 0.74%. Generally, the big turnaround points happen when it goes over 2% or so, and then you'll either see a big top or a big bottom depending on what direction the price is moving at that time. Weighted sentiment, interestingly, it's very low right now. Particularly negative sentiment, the lowest it's been since mid-July, early July. So that's something to keep in mind. When this negative spike hit in early July, from right there to right there, prices went up 35%. So keep that in mind. Certainly won't always be the case, but typically these negative ones are signs that a bottom is close. You can see right here, this one, the lowest one we've seen in the past year. From bottom to top, it went up 41% after that week hit where it had the lowest negative sentiment over the past year. So there is some definite credence for using weighted sentiment for Cardano. And then, of course, we talked about development activity. Just in the past year, you can see pretty clearly there's a nice uptrend going on, and it's just being developed more and more. So talk all you want about Cardano being an S coin and having no long-term viability in crypto, but the people working on the project clearly believe in it and are trying to improve and innovate. And that is a very large chunk of the battle when it comes to a coin being able to break through as a legitimate contender. Anyways, I think we went a little long on Cardano, so we'll save Litecoin for next week. Danny, thank you for bringing it up. I think Litecoin is a very interesting project to look at because it's been one of the best performers over the past month and a half now. And I think the topic on whether it's a leading signal for the rest of the markets is an interesting one. I'm sure many of you who started getting into crypto in the 2017, 2018 era, about 5 years ago, you may have noticed similar correlations that I have, but I think that's a very good discussion. Maybe I'll even look into that as an insight and see what kind of correlation Litecoin and Bitcoin have had over the years. But for now, I think this is a good stopping point. Maxim, is there anything else you'd like to say about just the markets and what we're seeing as we go into the last month?
Let's see next week. I leave it open to market to push one more time, and as it looks now, we will experience after this revisit of the let's say 17.5 for Bitcoin, or 17, as it seems now. But if after spiking up, see more of quietness or negative, so okay, whatever, keep going. And for the rest, and we will see next week. Yeah? For the rest of what we're sharing, just always keep in mind our main purpose is not to give predictions. We do and like to give them from time to time, just to share with you what we see. But it's more important, we want to share and reflect also on the way how you can analyze the market, so that regardless if we exist here or not, anyone who's on the stream, you don't depend on anyone. You know how to see through the lens of data where the market is. All this level of fears, reluctance, or commitment and FOMO, you can see it through the data. And then you find out everyone, we take our own risks, we have our own risk profiles, we have our own commitments in lives. So we should be able to make our own decisions and take responsibility on it. Yeah. And this is the main purpose of streams and also for our platform. And we want to be things like this. It's in a world where we want everyone to be able to succeed and to be able to build small teams, communities of analysts or researchers or investors, but should be kept small. Okay, big groups become crowd, and crowd become reasonable, so to say. So, but I do believe everyone can learn. There is no magic in understanding things. It's magic more to stay independent in your own decisions.
Very well said, my friend. Yeah, I think Maxim summed it up perfectly. We build a platform in order to allow you to see what others in crypto can't. And our goal in all of these streams is to show you the path to find the most valuable bullish and bearish divergences out there, so that you've got a real-time glimpse at where markets are going next before the crowd and the mainstream start to get involved in it. So hopefully these are helpful. We're always open to feedback, so drop some comments either on this live stream or in the comments section on YouTube, and we read them all. And same goes for our insights. Anytime you have good or bad things to say about the topics we discuss. True. So with that said, guys, yeah, I hope you all have a wonderful weekend. Stay warm and safe out there. I know it's cold in most areas of the world right now. And yeah, we'll be talking to you next week.
Talk to you next week. Thank you.
Thanks, guys.
Bye-bye.